sort of just, I wanted to zoom in on sort of ES here a little bit. That as we had that overnight flag break, essentially that zone from like 5203 all the way up to 5226, that zone had been churning since Monday morning, and it sort of overall was a big ass bull flag, but and then broke to the upside. That first one failed, built out a bear flag, and now it failed again. Now we're at a really sort of pivotal spot from technically and sort of gamma wise. I had mentioned this morning that SPX 5200 was going to cap anything today, and we had sort of a setup for down. And what I meant by that is sort of overnight the call wall was shifted down to 5200 SPX. So it made it very hard to go up from there. Essentially, it was some mostly bearish, positioning changes. So now we have sort of this volatility trigger, and I use these languages because a lot of people use the spot gamma. That's at 5191 on ES, sort of right where I just got long. I like normally getting long or short off of these call wall and volatility trigger areas because they tend to be exceptional support and resistance. The issue with them and when trading off them is these are mostly SPX options areas. So they tend to get slippy, especially sort of pre-market, like we saw a little break of that to the downside 89 when I said stop hunt. We tend to get a little slippy around them because we haven't adjusted the spread yet. So just when you do trade those areas, especially pre-market, remember they're always SPX areas and we don't know the spread yet. So you're trying to adjust for the spread change overnight that you don't know. So normally what I just do is I size lower and I go a little bit wider, and I tend to try and buy or sell them a little above or a little below because they tend to sort of get a little bit slippery around them. But this is a very good support area. If you join me on the short this morning, we got 15 points sort of cumulative, and then this long I think has an opportunity to sort of go back to 5200, maybe 5204. I don't really like having positions at the open because sort of those market on open orders can splash through these gamma levels, but between 5191, 5194 here, we get over 94, I think we can get back to 5200, 5204 area. The range I'm looking at is just that 5291 to 5226 today. And then I'll specify the last part. And when you have this volatility trigger, if we do get under that, because we're under all sort of the NQ ones as well, we could get pretty slippery today. So it just be careful that this long might work once. It might not work the second time, and every sort of successive time that it touches these areas, it's going to be less and less worthwhile. And then you're going to see some options rolling down this morning. And right now, it's a solid area. Options rolling down can really change that. So that's what I'm looking for today. And I know Gov sort of has some levels below here, but in terms of options and gamma support areas, we're at it. And a big slippery move can come if we get under there and sort of down to SPX 5150 and then even further down to SPX around 5120 area. So yeah, that's really all I got today. I'm watching to see if we sort of round this on my chart here and come back into like this area here. And if we really get going, come back to that 08 sort of area here, which would have been this bottom support, or this 12. So that's sort of what if you want to play the fringes and looking for a wider sort of range trade, which is my expectation at this point. We're at sort of the bottom fringe, but I mean, I wouldn't be buying 94. I mean, the trade was 91-ish. So I think this is a little bit chasey because we're still sort of in a area that could revert and retest it again. So that's all I got.
All right, let me share my screen. Okay, so what we're looking at here is ES, what Dan just went through. I'm simply showing you a slightly different picture. I concurred with pretty much everything that Dan was saying. It's like I was able to catch an early short and I rode it for a bit, so that was nice. The levels that you see on my chart right here is that 51.91. These lines, these levels were drawn yesterday. This level 51.91 is off of the 51.65 for SPX. And that was the key area. And I'll go to the SPX chart in a moment. But roughly, so yesterday, quickly, we opened up in here, and Smooth and I went over several times. Like we discussed the possibility of it getting up to, SPX 51.97, 5200, which correlated to 52.24, 26, 27 in the ES, and that's where we're at right in here. And then we proceeded to come off, and we went down into that 51.80 area. That was SPX, and now we traded below this area. So if you just take the macro view here, look at on Friday, okay? That's Friday's massive range, and that's just a huge range. So I made the comment that if we trade back below this area, the tendency will be to go auction and fill in this area with volume. So we just had our first test.
What's the area with volume? Is that 50? I'm just trying to follow along. 51.91 to what was the top end of that sort of low volume area?
The 51.91. It's right up to the 52.02, 52.05 in the ES.
Awesome. Thanks.
So I would expect if we were to trade back up here, I would expect this 52.02 to 05 area to be resistance, because it was very respectable support early in the day and then later in the day. So I would expect for us to be able to go trade back up in here to that area in ES, come back, trade back down, for the possibility for a move lower into this VPOC from Friday, this area here. So I expect for us to be able to trade back below that area today. That's my expectation. If I'm wrong and we get back above this 52.06 area in the ES, we'll trade right back up to the 52.17, 18, and we'll just fill in there. So we could indeed have a wider range today. Let me quickly go to the SPX chart. So it's obviously pretty messy there, right? So you can see, let me increase the size of this. Right below my marking of 51.80 is the 51.65. This is the area people just got long in the ES, the 51.91. This is where people just got long. And now this is where we possibility of trading down to the top of this gap. And this gap is below here that will need to be filled. So that's like a 51.48 to 51.30, 51.35 area at SPX. I wouldn't be surprised if we trade back below and we actually fill that gap. I don't necessarily think that we would really have that much slippage to get under 51 even in SPX today, but never say never. So I really don't see that.
The
So
only the only thing, and I'll add, and would be, is if we see a lot of those SPX options roll down, that could sort of exacerbate a move to get us down there.
it could, but we've got to fill this gap
We
first. The
do.
moment that we fill that gap and then go
Yep.
down and test this area, I mean, we get down here, anything's possible. So I never say never. So now what I'm going to do is I'm actually going to, so we see how busy this is, right? Now let's go back and make it cleaner. So here's that gap at 51.38 below here to the 51.47. Here's this area, which is the low from yesterday. And we just traded this 51.65 right there. We just traded here on the ES. So if we were to open now in the SPX, we would be in this area with the realization that we could trade down to this 51.50 area, which is 51.74.75 in the ES. And here's your gap. So now once I remove all that stuff, you can see this much more clear. And you can now see this other gap down here into here. And the reason this could be possibly, so this is right around the 50, this is SPX 5095, 5100 area. So there's a breach, the possibility of filling a gap through here, but you can see this area here. That's a previous significant resistance. So that's why I was talking about that. I think that it would be difficult to get under there, but it definitely could happen. So I'm just trying to point out level to level for people to recognize. Anyway, the spread closed at about 26 yesterday, 26 and change. And so that's kind of maintaining. It's just been maintaining 26, but that's just a clear picture of SPX, of where we've been, where we were yesterday, and where we could possibly go today. And especially given the overnight that we're gapping down, that'll create another gap above. And I'll point that out when we open. I'll hand it over to Smooth.
Thank you. Get my screen up. All right, so I'll be quick on indexes. You already got a lot of information there, but just point out some levels that we talked about the last few days. 91.75 is the 61.8. I am long off of that. This morning, already scaled out, but that's a key level for sure. And, you know, we can see that sort of being a key pivot. Below that, I don't know what this lines up with SPX, David, but 51.77 is the 50-day moving average on the daily chart.
So that's essentially 51.50.
Right.
That's right. And the gap is 51.47 in the SPX. So you're close to the gap below.
Okay. So definitely keep an eye on that level. That's going to come into play if we lose this 61.8 pivot. Yesterday, David and I had a huge confluence at this 52.24, which is, you know, with a little bit of slippage, which is basically where we came to the high yesterday. So if we do rally back, expect that area to be tough.
And that's SPX 5200.
Right.
Yep.
And if you remember on yesterday's call, I said, let's look left. Where are we? Well, this was a weeks-long consolidation area with basically where we're at is the low and the high up around 52.90, which would be the completion of the pattern we've been talking about. So that's what I'm watching for, sort of on the edges here. You know, if we did lose this and came down to this area, I would be looking for a long, and if we came up into this area, I'd be looking at a short. But you know, zoom in intraday and let's see what happens. You know, I have this level in here that we kind of retraced to and rejected here, and this kind of correlates. It's been a support area, so I expect that 5206 area. I think David mentioned that too, to be an area of resistance if we retrace back up into that area. So that's it for indexes on me. I'll go quickly to Tesla. I played along here up into this zone. I got stopped out yesterday, on my runners, and now we've gapped down off of that SEC investigation. So we've filled this gap here from late April, and just kind of watch how this reacts now. It's not really anything set up for me now, but it could be something that you could watch for a continuation on the downside. Not good news for Tesla. Anyway,
can you talk Amazon? I think that's probably the next one, and because that had such a big rejection at that area again, it's a really. I'm probably going to exit my position and wait at this point.
Yeah, so we have a pretty defined double top. It's not the cleanest pattern, but we did kind of see something along this line, which is a bearish pattern. And now we're getting the retrace. So let me do this. So I would be kind of drawing my Fibonacci's from here to here, and then probably looking at this 184 area as the first target, and then maybe even down into the 180s, low 180s on the retrace. If just watch for support kind of in this area. I think if it does want to sort of settle down and come back and retest up here, then that could be a key level on Amazon. I certainly I wouldn't be long at this point. Carvana, this has just been a great trade. We entered basically at the high of day yesterday around 124, and we're now gapping down to 113, just like we talked about yesterday. We get these big gaps. Make sure you take profit on the open, because there's going to be profit taking, so price could jump back up into the 115, 116 area. 114.55 was a key Fibonacci that got lost pre-market. If it continues to sell off, I'm watching this 111.35, which would take us into the gap, and then it's game on. I mean, gap fills down to 91.09, 91.08, which kind of lines up with this 61.8. So not a preposterous idea that it will fill it. I think the company is junk. They had that investigation or the report from Hindenburg or Heisenberg, Dan called it.
Whatever that guy's name is. But I mean, I literally said this. I had a conversation with David and Gov last week, I think, about this company, and I followed this company for many years, and it's a father and son that run it, and they just sort of fudge the numbers. Thing goes bananas. They do an offering, they sell shares, it rinse and repeat, and it's the same story with this POS company over and over again.
Insiders are dumping.
That's the MO. That's what they do, and it's what that Heisenberg, Hindenburg, whatever Berg said. Yes, he's dead on, and a report like that is sort of interesting now, because it's can they actually sell shares now? It sort of prevents them from selling shares because they don't want to make that report right. So it's an interesting thing here, right? And I would play this one technically now, because I'm at this point not expecting them to do an offering after a report like that.
Yeah. Hey, Lee, let me show my chart on Carvana.
Sure, hold on. There you go.
Gives you a little bit better view. I mean, it's a different view. That's all. This is just the area where Lee's talking about. We're trading 113.90 right now, and the 115.16 will serve as some resistance. but we need to get under this area here. And now you see the big gap below. So that's the play. Anyway, it looks different because of my use of market profile.
And don't do what I do. Make sure you scale out, because I forgot to scale out yesterday, so I'm sitting with my full position, which is a good thing today, but
doesn't always work like that.
Doesn't always work like that.
Yeah.
Rarely actually works like that. So
if those were the 100 puts, they were trading at what, 70 cents or 70 or 80, and they closed like at 50 or something. I mean, all of a sudden on a barely an uptick, and all of a sudden 20 cents on premium was lost.
Yeah, because this thing has 35% short interest, people are jumpy to get out of this thing, because that's what happens is people get real jumpy in the name because it has such high short interest, because it's such a POS company, and so people get very, very jumpy, and this thing can turn around on a dime. I think I said to you last week, I don't know of any other stock that is on my watch list that has consistently as many plus or minus 10% days as Carvana.
Yeah, it's crazy. Yeah, I think we talked about it over the weekend.
Yeah, I can definitely see, if we lose this 111.40, 35.40 area, we're probably going to flush pretty quickly to that 105.50, which is the next Fibonacci down below the gap. So that's kind of what I'm looking for. I took obviously the 100s, and I'm in the 115s for around $3, and I scaled a bunch around 5 yesterday. But I did not touch the 100s. I'm still full in those. So, and I'm in that from around 60 cents, 61 cents. So I think they closed around 80 cents, but they're probably going to open over $1, I'm pretty sure. So we'll be close to a double on those. So good opportunity to scale some. Like
I could see on a gap down this thing having a missile candle off the gun.
Yeah, I mean, you always get profit taking. However, people are pretty bearish on it after that report yesterday. So watch those options premiums, watch the volatility. And if the market's going to retrace and continue to sell off a little bit, that'll help. But even yesterday, when the market was grinding up, Carvana was grinding down. So definitely relative weakness, which is good to see if you're short something. So stick on that. Uber also had a little not great report, and they, if you want, Dave, pull up Uber for a second.
Uber?
Yeah.
Yeah, we'll look at that one, but.
So I'm if you look on a daily chart, the 200-day is around $60, and that's kind of the next area down I see here. So that could continue to sell off a little bit, and maybe there's an opportunity off of the 200-day for a long position. But yeah, that's definitely one to watch. A little volatility. It sold off from around $70 to 64.81 now. So
yeah.
The other thing to watch is we have bonds selling off a bit this morning too. So I'm going to be careful long, quite frankly. I'm going to I'm long right now, yes, but I'm going to be careful long today. There's some things sort of about the action I'm seeing this morning that's not making me, excited to go large size buying the dip today.
Exactly. I'll be looking to be short 02, 05, 6 area at ES.
Yep, me too.
Okay. All right. Time for one more cup of coffee, and we'll see you guys in the room.
Yeah.
sounds
Bye.
good. Thanks, guys.